Hi, my name is Paul Cheatham. I am the founder and CEO of Vanler Group, and I've been helping business owners sell their companies for the last 10 years. I've also bought and invested in companies over the last 10 years. I put together this guide to help business owners who are preparing for the taxes for 2025 taxes if they're looking to sell their business this year. And it's important to understand what is going to help make your business more attractive to buyers and also maximize the value of your business. And the same strategy that you're using previously to minimize your taxes is actually going to hurt you when it comes to selling your business. Because most buyers who are looking to buy a business that is, let's say, $6 million and under, are going to use the SBA 7A loan program. And the lenders of this loan program look primarily at your tax return. Yes, they will look at your profit and loss and other factors as well, but they're going to use your tax return to calculate how much income the business generates and how much of a loan payment can it support. And that's what this debt service coverage ratio is all about. It's a very important ratio and formula that you should be aware of when you go to sell your business. So this document will explain to you why you want to maximize the income on your tax returns. Yes, you're going to be paying more tax, but every extra 10,000 or 30,000 or $40,000 magnifies the sale price of a business, but it also makes it more attractive when a lender can see that the tax return is nice and clean. They're going to be more favorable to lending more amounts to various buyers. So here's a couple of things you need to be keeping in mind. Sometimes owners will pay themselves a high salary for whatever reason. They want to maximize their retirement income. But when a buyer goes to buy your business, the lender's going to normalize that income. So if you're paying yourself $300,000 a year and someone could come in as a general manager or CEO to run your business for maybe $150,000, the lender will actually normalize that income, which will work in your favor. But if you're paying yourself too little, it works against you in terms of how much of a loan they're willing to lend. Here's a big one: personal expenses going through the business, personal vehicles, your family vehicles, meals, travel, family insurance. All of these things maximize your deductions and the amount of and reduces your net income, but that will actually hurt you when you try to sell your business. Some lenders are savvy enough to realize, hey, the new buyer, the new owner will not need to run these expenses for the business, and they'll add them back to the net income, but not all lenders do. So by paying these expenses personally, you might actually be helping yourself out a lot. Also, another thing I found is sometimes, business owners will run a whole bunch of inventory for the business or prepay a whole bunch of expenses in December to minimize their tax bill. This will actually, once again, hurt the income of the business, but the lender's also going to look at the normalization and the income and expenses throughout the year. They're going to look at the monthly P&Ls as well. So they want to look for consistency, not these lumpy transactions, because that actually scares them a little bit. Last couple of things you need to be thinking about is everyone tries to file the taxes and file an extension. Maybe CPA is really busy. However, those tax returns are so important to a buyer getting a loan. So if you delay or you file an extension and you wait, you cannot close on that business until those taxes have been filed and sent to the lender. And then the lender is going to do an underwriting. They're going to contact the IRS and get a tax transcript to make sure you have filed it and there's no taxes owing as well. So the mindset you need when you go to sell your business is those tax returns are like a sales document. They basically, you want to make them look as beautiful as possible to make sure that the lender loves the look of your business. It's very strong financially, and they're willing to lend to a buyer to buy your business because it looks so fantastic. If you have any questions about filing your taxes, please don't hesitate to reach out. You only get to do this once. Refiling taxes is a bit of a pain, but I'm happy to help and answer any of your questions.